All right, YouTube, stocks by the numbers. We're back in action right now. Got that tooth pulled finally, feeling much, much better. A little sore, but in the next couple of days, obviously, I'll be 100%. But more importantly, as we know, money never sleeps. So we have to keep analyzing, continue looking for our buying opportunities or potentially our put shorting situations. But right now, we're looking at a company. Shout out to David Booth, who wanted us to take a look at D-Wave Quantum, ticker symbol QBTS, listed here on the New York Stock Exchange. Stock right now just broke $1. It's sitting here at 99 cents, down 8 cents, about 7.5% here on the day. As we see, this company came out about $10. We dropped down. We went up a couple of dollars. Then you can see we go from this $13 range all the way down, cratering to 40 cents. And as you see, that is our low here of 40 cents. Now, from that point, we had a nice little rally, I'm assuming going into earnings. As you see, that was an earnings miss. But the stock absolutely exploded, went on a run north of $3 a share. So if any of you had this on your watch list and you got in down here, 40, 50, 60 cents, and you caught this run up, hey, congratulations. Fantastic play to you. Since that high, though, as we see, about mid-July, the stock has basically completely sold off, given most of it back, and been in this downward channel, this downtrend here. And this is going back to August 4th. You can see if I zoom in a little bit, since that point, the stock has not really maintained. This is a one-year chart, by the way, so the moving averages obviously change with each time frame you're looking at. But, on the 1 year, you can see that it broke the 20-day moving average there on the 4th and has consistently been trending downward and has not jumped back above it. But if we switch over here even to the 1 month, you can see you have a little pop here above the moving average. Before that, it was below it, right below it. We had our little pop. See it tried to regain the moving average, but then rejected and went lower. See it this whole time. See, it's below the moving average. This whole time below the moving average. So minus this big run up here, as you see, predominantly above the moving average. So before and since, the stock has predominantly been below the 20-day moving average. Now, of course, I understand, it's not cemented that this is, concrete evidence that the stock is going to keep selling off. But what this shows me, in my opinion, is that we have a lack of confidence. We have a lack of confidence right now in D-Wave Quantum. And reason being, in my opinion, I think it actually goes back to the numbers, of course, as much as we don't want to talk about it. As we see here, big miss recently here on the EPS side, and a big chunk miss actually for a company of this size on the revenue side. The quarter before, again, that's after we found the bottom and ran up to above $3, was also a miss on the top and bottom line. But you're going to notice a trend here, right? We back up the quarter before, we had a beat on the EPS side, but they missed on the revenue side. And then you go the quarter before, and you have the same scenario, where the company beat on the EPS side, but they missed on the revenue side. And then, of course, this was the first quarter that they reported since going public, and they missed on the revenue side. So what we have is a company that is doing business, but is not doing consistent business, right? So this is going to be a situation, if you're getting into this company at these levels, in my opinion, you're obviously planning to hold this for the long term. If you're in a situation now where you're just trying to buy this at $1 because you think it's cheap and you're trying to catch a pop up to, this fib $1.80, $1.38, or a pop back to like 1.5, so you can make 40-50% real quick. Listen, understandable. However, remember, I always try to reiterate to you all that, just because a stock is going down, it's not always a buying opportunity, right? This goes back to the whole Reddit forums, just buying companies that have short interest going up. Like, you have to understand, you have to find out the why also behind the short interest, right? And as we look right now, like this company, in my opinion anyway, from an analyst standpoint, in my opinion, this should be shorted, and this actually should go lower. Now, again, should it completely crater and go back to a 40 cent, new lows 30 cent? I don't know. That might be a little extreme. But here, in my opinion, drawing these lows from these 40 cent new lows back in early May, drawing our trend line across, you can see we're very, very close to testing that support level. And We almost tested it here back on Friday on the 8th. We can see at the top of the screen the O, the H, the L, the C. Again, that's the open, the high, the low, the close. And you can see the low, 86.11 cents. So if we go like a day or two here, we'll go like Thursday, and you can see right at that trend line, it's about 87 cents, potentially even 87.4 cents maybe. But you can see that the stock now is heading back downward and could continue down to this support level that we drew out of about 87 cents. And that, in my opinion, is going to be the deciding factor. Now, technically on paper, we're going to look at some of the numbers in a second. Technically on paper, in my opinion, the stock should actually break lower. And I don't know if we can even see all the way down to 60 cents, but it really kind of should. It should break this level, and 87 cents, I mean, you want to call it down to like 70 cents maybe, but at the same time, that's really not too much of a key level. So, not exactly sure where it could go specifically, but in my opinion, according to the numbers, it should technically break this support level soon and drop lower as opposed to going higher. Now, what am I telling you? Am I just bashing the company that you might own at $6, $7, $9 a share? No, not at all, right? Because again, to reiterate, in the long term, they are slated for bigger and better things, right? Almost reminding us of like a SoundHound or Nikola that we looked at recently, right? Right now, in the short term, revenue's a little rocky. We might have some misses. We might have some beats. However, down the road, a couple of quarters down the road, they're expecting much, much bigger and better things. Higher millions to tens of millions of revenue are estimated to come in every quarter, right? So the entire landscape of that stock and the whole valuation is probably, in my opinion, going to drastically change inside of the next 1, 2, 3 quarters. And we have a very similar situation here with D-Wave Quantum, because as of right now, in plain English, they're kind of shitting the bed and kind of disappointing basically anyone who's even watching the company, let alone connected to it, right? So where is this going to bring us? Again, I think, in my opinion, we break this level and we come down into the 70s and potentially the 60s. And the reason why I'm saying that is because, again, we have to take what the market gives us. And why should we force our way in here at $1 when we could potentially buy this for, 67 cents or something, So save yourself the heartache. Again, this is more towards newer traders and investors. Again, if you're already involved at $7 and you're just curious about the company, we'll talk about the company. But, if you can't add to the position, just remember, again, don't beat yourself up. Every single person you know and talk to on these social media interactions, they have all bought stocks and had them go down. They have all felt 100% confident with an option play and had it completely head in the opposite direction, and they immediately take a massive loss. You are not alone, regardless of how drastic and negative you feel your situation might be. So a situation like this, if you are in at $7, $8, obviously I would tell you, if you can, add to the position, lower your cost basis. If you can't, remember, stay positive, stay confident, right? There was something about the company up at $7 that caught your attention. You potentially saw bigger and better things down the road for the business, where they can go, the potential that they can have. So just stay confident, because again, it might take a long time, but in the end, you might turn out being right, even up at $7 a share, right? So don't beat yourself up. Don't do it to yourself. But right here, we have a market cap, we'll call it about 100 million. And again, we can see that we missed here on the EPS side. Yes, on the EPS side, excuse me. But even down here, we can see, looking at the revenue, right? 137 million up to 17, up to 24, back down to 158, and now back up to 17. So we're seeing inconsistent revenue, but more importantly, look at the profit margin that has completely shit the bed. I mean, this company, right around this time last year, this company was losing 13 million, as we see, off of the 1.37 million, profit margin almost minus 1,000%. And over the next 2 quarters, they slowly climbed that up to less than minus 600%. And now, since that point, moving into the end of 22, going into 23, we can see, look at that drop in profit margin, almost tripling, dropping now to minus 1,550%, slightly moving higher after last earnings to minus 1,517%. So the real problem here is that expenses are drastically outweighing the revenue that is really not coming in here at the moment. And of course, again, not to be all negative, because from a technical standpoint, the stock could drop down here to whatever, 87, 88 cents. And, by the end of the week here, it could bounce off of that level and start to run up to $1.38. That's why I have, both the green and the red for you to show you where this thing could potentially go. But again, in my opinion, it's really all about this trend line and just the hype behind the company, or comparing it to something like a Fubo where, it's a smaller cap company, but, is it undervalued? Is it going to start running from here? No, in my opinion, it really shouldn't. And again, I don't know if they're going to bring it all the way back down to 40 cents. That might have been a little bit of an overreaction. But I just do feel that it could break here, and as a new trader investor, you could get a better price. And again, it's because we're not dealing with anything consistent, right? So you really can't show me anything that is going to force someone to say, you know what, you're right, this is the bottom here at $1, and it's definitely going to start going up from here. There's really nothing to support that. If we switch over here and we look annually, you can see revenue only went from about 6.25 up to a 7.17 million, and of course the profit margins completely shit the bed because the company's leaking like a sieve. If we come down here, though, interestingly enough, if we look at the forecast of the company, this is why I talk about pricing and timing in the short term compared to just the overall essence and the picture and the potential of owning an investment in a company, right? So remember also, I want to remind you guys, when you have the liquidity to buy shares instead of just having a couple of bucks to roll the dice with some options, remember that when you buy shares, you're technically like a part owner of a company, right? So if you're going to take your hard-earned money and invest it into one of these publicly traded stocks, they should at least be companies that are anticipating bigger and better things, right? You should invest into companies that are consistently growing and are more than not beating earnings for the most part over the years, and they have a good track record, and they provide, stellar products and services, and they're going to be here to stay, and it's inevitable they're going to grow over time. That's how you should really look at a situation. So something like this, they're involved into quantum mechanics, it sounds sick, it's probably going to be massive, look at these price targets, blah, blah, blah. Just seeing it down at $1 does not make it a buy. And in my opinion, like I always say, I'd rather miss a short little rally here in the short term and potentially, not be able to absolutely time the bottom and get it for the cheapest. But also, if I was to step in here at, let's say, $1.30, instead of forcing my way in at 99 cents before it goes down and then goes back up, what I would be doing is I would be waiting for confirmation on the fundamental side. And the reason why is because, again, you can see since the company came public, they have not beaten any analyst expectations on the revenue side for about the last, year and a half or something like that. But now, again, moving forward, this is where we talk about bigger and better things, right? Because it's really been between 1 and 2.7 million. It's been between 2 and 2.7 million on these estimates since the company went public. Now, next quarter, estimates are jumping to 289, and then look at the jump up into the 4s, almost 5s, and then above almost 5.5 million going down into midway 2024. And if we switch over here annually, of course, as well, right? Last year, you can see slight miss by about 4.75% on the estimates for the fiscal year of 2022. However, for 2023, 11.06 million. In my opinion, I think they're going to miss it again. But again, moving forward, you can see 2024, it jumps up to north of 24.25 million. Then almost 60 million. Then 170 million. So this is what I'm saying. This is another situation where in the immediate short term, it is extremely uncertain, it's volatile, the stock may randomly just tank and hit these new lows. However, more importantly, in the long term, the broader picture, looking 3, 5, 10 years down the road, this may be a company that is absolutely going to leave its current price and market capitalization in the dust. Right? Because again, if we get back to that $1 billion market cap, let's just say we grow 10x, right? That's going to bring the stock back up to 10 and change, and that's going to bring the market cap close to about $1 billion. And we know that a lot of these small cap companies, is a situation like this. They're bringing in a couple of million, but they're losing money, but they're trying to grow the business. But Wall Street's keeping the valuation at like 900 million, 1.1, 1.4 billion. Right? So that's why I'm saying if this company could become more consistent and actually maybe back-to-back quarters moving forward actually come in above these estimations on the revenue side, then you may start seeing that pop. Because again, they technically missed earnings and the stock went from 40 cents to above $3 on that rally. Right? So that's what I'm saying. If that can happen just because it's oversold or because there was some positive mentioned on an earnings call, just imagine if there was that much more fuel to the fire that the company actually beat revenue estimates for the first 1-2 times since going public. The company might up its forecast for the fiscal year going into 2024, right? These are all phenomenally positive catalysts, and these are the consistent catalysts mixed with positive earnings and growth of business that really propel stocks into the quote-unquote insanely overinflated valuations, right? Because that's why, I always bring up something like NVIDIA. That's why a company like NVIDIA is trading so high, because it's just constant positives. The company is just consistently growing, consistently beating estimates, consistently forecasting bigger and better things. And every time something like that is mentioned, the stock goes higher. And then now, because of the positives of the actual business, you have to add in the positives now of Wall Street. And you have every analyst from A to Z increasing their price target. And every financial institution now taking a larger position. Right? And every one of these analysts saying, oh no, it's overweight now, up from equal weight or whatever. So all of those positives just consistently chunk the stock higher. So you could turn around one day and all of a sudden this thing's at like $20, $24 a share or some crazy shit like that. And we're looking at it here down at $1, potentially sub-dollar. So that's why down the road this really could work out. And even looking at the analysts' forecast here, we can see that we have 5 analysts currently looking at the stock. All 5 of them put a strong buy on it. And as we see here, price targets ranging anywhere from as low as 3 to as high as 6. So again, from this level, $3 as it shows here, you're looking at about a 200% return. Down the road, you're looking at potentially 500+% returns. But again, the question is this the lowest it can go? And with a market cap of 98 million, bringing in roughly what they brought in 7 million last year. I mean, even if you 10x that, you're talking about a market cap of 70 million, which is roughly 35% lower than where we are right now, which would bring us to about 70 cents, between 70 and 75 cents. So that's why even that line of 60 cents, that may be a little too low. So we may be potentially seeing 70, 75 cents. But again, it goes back to that trend line, that support line that it has to hold inside of the next couple of days. So we're going to have to keep an eye on it. We don't have confirmation yet, in my opinion. But again, forecasting bigger and better things. So down the road, as well as we see here also, the profitability is going to continue to remain a struggle, looks like, until really going into 2026. But again, for right now, the company needs to report strong revenue and actually come in above expectations, in my opinion, to really start to gain some attention, some bullish momentum. Also, more importantly, we can see for 2023 estimates of 11.06 million. Okay, so let's do some quick arithmetic. They reported 158. Then they reported 171, right? I'm actually going to take out the calculator too, because I just don't want to waste anyone's time and try to do this in my head real quick, right? So we got 158, and we have 171. Okay, so we're up to 329 million so far in the first 2 quarters of 23. Now we're estimating 289. So let's say they hit that estimate, right? Let's say they meet it. 289. Now we're at 618. Then we have estimates of 4.87 million for Q4 of 2023 to finish off the year. And let's just say that they hit it 4.87, and we're looking at 11.05 million on estimates of 11.06 million. Now, unless the company just from this point really turns a corner and begins kicking ass and taking names and really generating this revenue coming in above these expectations here, chances are they're probably going to miss these fiscal year revenue numbers of a little over 11 million, right? So we may have another red year for QBTS here. So that's why I'm saying, the idea of the company, the long term, may really be a winner. Right here in the immediate short term, I just think you might be able to get a better price. I really do. And I think like that 70-cent range, even if it drops down to like 60 or like 57 cents and finds another new low and then bounces from there back up to $1, whatever. Like we always know with companies like this, these small cap companies that are reporting inconsistent revenue, we know that they're going to be volatile and they could potentially go lower after we buy them. So, again, in my opinion, I would say probably when it breaks 75 cents, if I had liquidity and I wanted to position myself or begin to position myself into this company long term, I would probably start buying at 75 cents. And if the stock continued to go lower and it broke 60 and dropped down to like 52 cents or something, I would absolutely add to the position. But again, even though the price may be attractive, we need the revenue to be attractive. But again, speaking more in the immediate short term, if it does drop down into those 70 levels, those 60-cent levels, chances are it would probably be a decent level to step in, and then more than likely you can even see a rally back to $1 or low dollar going into next earnings report. And if you wanted to be a quick trader on it, again, you can get in at 70 and you can sell it at $1 going into earnings and not risk it and secure yourself a quick 40% or whatever that is. But again, it's really hard to call. It really is hard to call because the company hasn't proven itself. But more importantly, going to the actual financials that are adding to the situation. As we see here, they missed on the revenue forecast, slightly beating on the EPS forecast for 2022. Debt jumped up to north of 21 million, has since pulled back to about 18.7 million. But also we can see here that both in the short and long term, we have liabilities outweighing assets. And of course, we know we preferably want assets to outweigh liabilities, not the other way around. So now this essentially makes like a negative equity, and they're only holding 27 million in assets, short and long term. So that's why I'm saying, even if you double that, you're looking at 54, 55 million. That's why they really could chunk this stock down again. And that 60-cent level would bring the market cap down to like 60 million. And again, you can see, that would be maybe like around 1.4, 1.5 times total assets. So, this is why this company has been trending downward. Again, as we see assets being outweighed by liabilities. And again, the equity is assets minus liability yields total equity. And as we see, we have negative equity. Holding, again, about 18 million in debt, we'll call it, looking at a negative book value per share. Right? So this is what I mean. I understand the hype behind a lot of these tech companies, and a lot of people will see a stock like this and say, well, it's only $1 a share, I should buy it. No, you really shouldn't. Because they can crater this son of a bitch right back down to 40 cents, no problem. Now you're sitting there with a 60% loss, wondering, how come this always happens to me? No. It's because you're kind of buying crap right here. Again, long term could be good. Short term kind of looks like crap right? And we can see just last quarter, 1.7 million in revenue, cost them $1 million, so they only cleared about 700,000. And look at the operating expenses. This is what we're talking about. So operating expenses are maintaining, this mid-teens to now even mid-20 million level. So that is why until the company really starts chunking in some revenue, you're not going to see anything positive here on this income statement, on the balance sheet, anything, in my opinion. And I really do think we do not have to force our way in here at $1 a share. And if we come down here and look at even some of these statistics here, yes, I understand the price to sales ratio may be attractive. It was lower, but then it jumped up. Over time, it's always been higher, but again, not really the best indicator. If we come down here, we do see some of these margins slightly increasing, right? As we see the gross margin percentage was well above 60% and began to pull back to as low as 26.6% and has now rebounded 41.3%. So that's heading in a good direction. We have the operating margin, again, massively negative, but at least it moved up a little bit, along with the EBITDA, again, earnings before interest, taxes, depreciation, amortization. We can see similar numbers here in the EBITDA margin and, of course, in the net margin, slightly moving upward. But is it enough to basically force Wall Street to bring this stock up from this level and make us money? And the answer is no, in my opinion. In my opinion, the answer is no. I am not seeing any urgency. Again, all of these, like these forecasts, these increases, that looks awesome. And if this company now on 289 million posts 3 million, then we can come back and reevaluate the situation. And then if another update 3 months later, they're coming in with earnings 487, the company posts 499 million. Now we are talking about a completely different company and situation. We would have to completely reevaluate the entire company from top to bottom and now take a new analysis position moving forward. And again, on the technical side, again, we looked at the numbers kind of look like shit. And coming off of this support level, again, we could have a bounce higher, breaking out of this downward channel. And again, even if we look at stock charts, we can see the RSI has kind of been slipping. So I can appreciate the fact that it's potentially getting ready to bounce soon in the next couple of days. But again, more importantly, it is going to be all about this support level. And, why buy it today at $1 when I could potentially buy it at 87 cents? Or it could even flash crash down through support before regaining it and having that pop, right? So they can bring it down to 87 and then chunk it down to like 76, and then it could regain, 88 cents and then pop back up to $1 and $1 plus. So this is why, the trend lines, it may be, I don't want to say elementary, but, it may be a very simplistic way to approach some of these charts. But let me tell you something. A lot of the times, these trend lines are much more key than people think. So even doing something as simple as this, drawing along the bottoms to try to see where the next support level is, can really come in handy, especially if every dollar counts, which I'm sure it does for a lot of you, and you'd rather pay 75 cents for something as opposed to 98 cents right here. So, keep an eye on this one. I would put it on the watch list. This is our key level we're looking at. We don't have next earnings until first week of November, roughly November 9th. So you still have some time. They just reported earnings. It was like shit. It hit a low of 40 cents. Now it's at $1, but it was above 3, and it has been completely shitting the bed for 2 months straight. So I would be patient. I do not see any urgency here right now in the immediate short term, and I would personally wait for a better price. Real quick on stock charts, we can see that the stock recently broke, August 15th, broke the 200-day moving average and has since been trending downward. And chances are it's probably going to continue downward. It does show a little cross here on the MACD on the daily just the other day, yesterday actually. But, in my opinion, it really shouldn't even go up to $1.19. But I understand it's been in a long downtrend and the RSI is low, so understandable. But in my opinion, even if it hits this 119, it will most likely reject immediately and probably reverse back down into the 90s and the 80 cents. RSI sitting at 37.2. We could see at times we were well below the 30 benchmark and even well above the 70 benchmark. So right now, again, in a volatile, uncertain, small cap, inconsistent revenue reporting stock, we really, in my opinion, cannot use, it's oversold, it's underbought. I really personally wouldn't use that argument to make myself confident, really, if you will, in a company like D-Wave Quantum. Switching over to the weekly, we can see RSI still sitting at about 40 and change, right? So that really hasn't hit the low. But again, as you see, we really fell off. We had this big run, and now we're completely giving it back. So even if you trend upward like this and say it's going to be somewhere around here, you can see 69, 70 cents. So that's why I'm saying, in my opinion, I do think we're going to get a better price. And again, on the long term, the MACD was actually rising this whole time that the stock was cratering and then bouncing, as we see here. The MACD was rising, and now recently crossed back down to the downside. So this is why I feel, in my opinion, I just think the negatives are outweighing the positives. And in the long term, this one could be great. And if they come in and, beat earnings, or if the stock starts moving on some positive catalysts, let me know, even on another video in the comments, and we'll jump in, we'll do another update if a lot of people are keeping an eye on this one. I have no problem updating you guys on this stock. But again, right now, in my opinion, short term, I would wait for a better price entry. Long term, it could be good, but it just hasn't proven itself, and nothing is guaranteed in the market. So I wouldn't advise making a donation here in a company like this when I can get it for potentially 30, 40% cheaper. And I'm going to end it there. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, share the video, helps me get more eyes on the channel. More importantly, subscribe to the channel. That is our handshake agreement. I'll review any stock, any symbol you guys throw out at me. I'll give updates on stocks we looked at. And if you want, again, the Discord is in the description of every video. Join the Discord if you want to talk about stocks, you want to talk about the weather, you're looking for long-term plays, short-term plays. We got a nice little community going in the Discord. I called out puts on QQQ, which is the NASDAQ ETF, and DIA, which is the Dow 30 ETF, and called out puts earlier, and we can see now that, obviously, well, the NASDAQ was pretty much red all day, but we can see now that the Dow has gone from green to red and headed downward. So, again, if I see anything in the short term, a situation like that, I'll try to call it out in the Discord. So if we have any short-term day traders, scalp traders, you guys can try to make a couple of bucks. But on the flip side, if you just want to come in and ask me, how are we feeling about SoundHound? Or, if you want to join and 3-4 weeks from now you ask me, hey, what's going on with D-Wave? How's that looking? Of course, I'll give you updates. I'll do all of this for you guys. But again, all I ask, handshake agreement, push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I do always say, I can understand and appreciate that markets are very volatile, they're uncertain, and they're just very stressful. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day. I'll catch you guys in the next vid.